Wall Street just woke up to something they've been ignoring for the last 3 years. IBM, the company everyone wrote off as a dinosaur, has quietly become one of the most aggressive AI and quantum computing plays in the entire market. And while everyone was busy chasing Nvidia at all-time highs, IBM stock has already doubled. Morgan Stanley just raised their price target. Wedbush calls it the most underappreciated AI story on Wall Street. And if you don't understand what's happening inside this company right now, you could miss one of the biggest re-rating stories of the next 2 years. Stay with me until the end of this video, because I'm going to break down exactly why IBM is no longer the IBM you remember. The 4 business segments driving this transformation, the quantum computing moonshot nobody is pricing in, and the specific numbers that tell you whether this stock still has room to run. Let's get straight into it. For decades, IBM was the punchline of tech investing. Slow growth, shrinking revenue, a dividend trap that income investors held onto while the stock went nowhere. From 2013 to 2020, IBM lost to the S&P 500 by more than 200%. But something changed in 2020 when Arvind Krishna took over as CEO. And what he's done since then is one of the quietest, most disciplined corporate turnarounds in modern tech history. He spun off the legacy infrastructure business as Kyndryl. He bet the entire company on hybrid cloud and AI. And he made one acquisition that, in hindsight, may go down as the smartest M&A deal of the decade. Red Hat. IBM paid $34 billion for Red Hat in 2019, and at the time everyone said they overpaid. Today, Red Hat is growing revenue at double digits, and it's the foundation that allows IBM to run AI workloads across any cloud: AWS, Azure, Google Cloud, on-premise, anywhere. That's the killer feature enterprises actually want. Now here's the part Wall Street is finally catching on to. IBM's AI business is real, not hype. Real bookings, real revenue, real customers. Their generative AI platform is called watsonx, and as of the latest earnings, the AI book of business has crossed $9.5 billion in cumulative bookings. Let me say that again, $9.5 billion. That number was under $1 billion just 18 months ago. Roughly 80% of that is consulting and 20% is software, but the software mix is climbing every single quarter, and software carries margins north of 80%. According to analysts at Bank of America, IBM's software segment alone could be worth more than the entire current market cap of the company within 3 years. That's the kind of math that gets institutional money moving. And here's why enterprises are choosing IBM over the flashier names. Big companies, banks, insurers, governments, hospitals, they can't just dump their data into ChatGPT. They have regulations. They have compliance. They have proprietary data that legally cannot leave their own infrastructure. IBM watsonx is built for exactly that. It runs on the client's own cloud, it's open-source friendly through Red Hat, and IBM has 160,000 consultants on the ground who actually deploy it. JP Morgan, Citi, the US Open, NASA, Samsung, these are not pilot projects. These are signed, multi-year contracts. Wedbush analyst Dan Ives recently said IBM is becoming the enterprise AI standard nobody is talking about, and he raised his price target to $325. Now let me get to the part that almost nobody is pricing in: quantum computing. This is where IBM's positioning is genuinely unmatched. While Google and Microsoft make headlines with quantum announcements every 6 months, IBM has been quietly building the largest quantum computing fleet on the planet. They currently operate more than 80 quantum systems globally, and their latest processor, called Heron, has crossed 156 qubits, with error rates low enough to actually run useful calculations. IBM's roadmap is public and aggressive. They plan to deliver a fault-tolerant quantum system called Starling by 2029, capable of running 100 million quantum gates on 200 logical qubits. That is the threshold where quantum stops being a science project and starts breaking real-world problems. Drug discovery, materials science, cryptography, financial modeling. McKinsey estimates quantum computing could generate up to $1.3 trillion in value by 2035. And right now, IBM has more paying quantum customers than every other competitor combined. Boeing, Mercedes-Benz, Mitsubishi Chemical, the Cleveland Clinic, all of them are running workloads on IBM Quantum today. This is not a 2040 story. This is revenue starting to inflect inside the next 24 months. And here's the kicker. Almost zero of IBM's current $200+ billion market cap reflects quantum value. It's a free option attached to the stock. Let's talk numbers, because this is where the thesis either holds up or falls apart. In the most recent quarter, IBM grew revenue around 9% year-over-year on a constant currency basis, the fastest growth rate in over a decade. Software revenue grew 10%. Red Hat grew 14%. Free cash flow guidance was raised to $13.5 billion for the year. The dividend yield sits around 2.5%, and IBM has raised that dividend for 29 consecutive years. Operating margins are expanding, net debt is coming down, and the company is buying back stock aggressively. Morgan Stanley's bull case puts the stock at $350. Goldman Sachs has it at $320. Even the bearish analysts at Barclays have moved their targets up twice this year. Now I want to be clear about the risks, because this is not a one-way trade. IBM's consulting business is exposed to enterprise spending cycles. If we hit a recession, big projects get delayed. The mainframe business, which is still a meaningful chunk of revenue, runs on a refresh cycle that can create lumpy quarters. And quantum computing, while promising, is still years away from material revenue contribution. Competition from Microsoft, Amazon, and Google in enterprise AI is brutal. These are not small risks, but the setup here is asymmetric. You're paying a reasonable multiple, around 22 times forward earnings, for a company that is finally growing, returning cash, and sitting on two of the most important technology platforms of the next decade. So here's the bottom line, everyone. IBM is not the dinosaur anymore. It is a hybrid cloud company built on Red Hat. It is an enterprise AI company built on watsonx, with a $9.5 billion pipeline. It is the undisputed leader in commercial quantum computing, and it pays you a 2.5% dividend while you wait. The stock has already moved, but the institutional re-rating is just beginning. Watch the next two earnings reports closely. Watch the software mix shift. Watch the quantum roadmap milestones. If watsonx software bookings keep accelerating and Heron-class quantum systems deliver on schedule, the price targets we're seeing today will look conservative 12 months from now. If this breakdown helped you see IBM in a new light, please hit the like button and subscribe so I can keep bringing you deep dives on the stories Wall Street is sleeping on. Take a close look at the names we covered today. Do your own due diligence, and as always, invest at your own discretion. Wishing you all profitable trades ahead.